Sally, the reason I said it sounds like good news is obviously anybody's mortgage coming down, anybody having to pay less is good news for them. But I just wonder what it means for the general market and why it's happening.
Well, the easy way to answer that really is to talk about swap rates, which is not really tea time subject, but it's something that the mortgage lenders use to judge how they should price their own products. And we've seen swap rates coming down for the last few months. And in fact, they've been coming down even over Christmas. And that shows the mortgage lenders, they think that there are brighter times ahead and that maybe a base rate cut is on the horizon. And so the lenders feel confident that they can actually offer more affordable rates, shall we say. It is worth pointing out that although the rates are coming down, which is great news, for the 1.6 million people who are remortgaging off low rates this year, that's an awful lot of people, they will still be looking at rates 2 or 3% potentially above what they fixed at 2 years ago. So yes, it's better, but for those people who are remortgaging from fixed products, they're still going to have quite a shock in their pocket every month, unfortunately.
Yeah, so Sally, I suppose we could describe it as a very small silver lining rather than, hooray, the housing market, the mortgage market is getting so much better. And generally speaking, again, my understanding was one of the reasons why banks were putting their rates down is because, building societies, is because they weren't shifting many mortgages. They weren't hitting their own targets, which again might show that the market isn't in a great place.
Yeah, I mean, it's certainly true that they have targets, they have money that they have to lend. That is their job, is to lend money, and otherwise they don't make any money. And the market has been, I wouldn't say depressed, but it has been suppressed in the last 6 months or so. And no wonder when rates were going 6, 7, 7.5%, unless you really had to, who wanted to commit to a mortgage rate of that? What we have seen in the last month or so, and the lead up to Christmas, which was very strange, is a returning confidence in purchasing. So people have held off, people who have thought, no, not now, not at the moment, I'll just wait and see, appear to be thinking, okay, if not now, when? Things are going in the right direction. And the lenders can really encourage that sort of growth in the market by offering these rates. It's funny, everyone has sort of followed suit. We thought there would be a bit of a bonanza, shall we say, this month, but it's come a few days early. I'm surprised that it's happened this side of the weekend. I expected the announcements to be next week. And I hope that it does give people confidence to get on with their lives and take that leap if they can, because it's been a really difficult year for most mortgage holders and prospective buyers.
And Sally, we've only got a few more seconds, but anybody who either has to move their mortgage, because as you said, they're coming to the end of their fixed term, or people who are thinking, maybe it's time for me to move, maybe it's time for me to remortgage, what's the best advice at the moment?
Don't bury your head in the sand. I always say this. Get some advice from a reputable mortgage broker. Recommendations are the best. And start looking at your options at least 6 months ahead of time. That way you can lock in a rate if you're remortgaging. You can do that 6 months ahead of time. And then knowing you can change it if things improve, if there are better rates out there in the period. And if things do go slightly awry, which we have seen, then at least you've got something in your back pocket and it's not the worst case scenario. So preparation is key.
Okay, well, I think always that advice, don't stick your head in the sand, is very valuable advice.